So, good morning or good day. It's Tuesday, 23rd of October 2018. Like every business day, like every trading day, welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, markets. We maybe 1 or 2 questions from your side directly answer in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down and displayed there. Also, some other information which you maybe like to read, for example, the key information documents, the kits, everything to find on our web pages. Also, the different options and offers for retail clients and professional clients. If you're in the European Union, there's since August 2018 a different offer for retail clients and professional clients. Sometimes a picture shows more than 1,000 words. Here we show 2 prominent examples for 2 great instruments, DAX 30 or Euro dollar. The margin requirements will be quite different for retail clients, professional clients, like you can see displayed. Of course, retail clients will have also some benefits, like an unlimited protection against negative balances. Professional clients will get that not via regulation, but some brokers and of course also Admiral Markets will have an additional protection. We call it negative balance protection policy. Here you are protected as professional clients up to 50,000 British pounds, what is around about 7,000 euro. Check all the details out and how to apply for it if you're a professional client here via the link what you see displayed. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international Forex and CFD broker. We have over 18 country offices. So my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. Like today, on Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marcus' Day. On Friday, it's Dirk's Day. Our leading day traders live every business day, every trading day to the same time. It doesn't matter if you are a retail client or professional client, everybody gets the same great spreads and conditions. For example, DAX 30 or also Euro dollar, typical spread of just 0.8 pips or points without additional commission. Also here, all details on admiralmarkets.com. Same like our contact details. You can call us, you can send us email or visit YouTube or Facebook, everything linked on admiralmarkets.com. Thank you for listening to my introduction. And now it's time for our day trader of today. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, Jens. Thank you for the introduction. Good morning, everybody. I hope you can hear my voice, and I hope that my screen is just starting to pop up there now. So here we are, ladies and gentlemen, Tuesday, 23rd of
So we can't see the screen so far.
Here in the UK, we
can't see the screen so far,
and the
voice is today not the best technical quality. I don't know what's going on. We can hear you, but more like via a mobile phone connection. But let's try and make the best from it.
Okay, I think what we have in the UK this week, Jens, is we have a lot of kids off school on holiday this week. Whether that's had an impact on internet performance, I don't know. But I hope you can now all see my screen. I hope you can all hear my voice. I'll go a little gingerly, shall we say, this morning, just to hope that you can all sort of keep up with what I'm going to talk about. So this week we've got a little bit of news coming through for this week. I think we have Mr. Carney, the Governor of the Bank of England, speaking this afternoon, and undoubtedly that will have some impact upon the sterling, which we're going to look at in a moment. We have some interesting. We have a Canadian rate decision tomorrow. We're expecting maybe a forecast of a 0.25% rise. So we'll have a little look at the dollar Canadian there. Okay, just to sort of see how that's setting up. We'll not surprisingly have a chat about the sort of the dollar index that drives a lot of our FX decisions. And then on Thursday, we have ECB rate decision, and although we're not really expecting any sort of anything different or any particular fireworks there, we do have Mr. Draghi speaking on Friday, and I think that will be closely watched to see what he has to say. And then, of course, we have on Friday morning we have US GDP sort of GDP rate or GDP decision, GDP update, which as most of you will know Mr. Trump likes to keep an eye on, so not surprisingly, the market itself will be keeping a particular eye on. So why don't we, as I have a chart up here, this is the Dow Jones. Okay, so why don't we start and talk a little bit about this to begin with, and what we had last week was, if you remember, I talked about how we were going sideways, and I thought we'd actually go sideways for a few more days, but actually, as you can see, we popped out of this symmetrical triangle. Those of you who joined me on the Monday afternoon Mastering the 4Ms of Trading webinar yesterday, we spoke about this, okay, about symmetrical triangles, and we can see that actually price popped up very nicely, and then actually what we've had since then is a little bit of a continuation of the drop. The thing I would be saying to traders, just to keep an eye on, just to watch, takeaway is, if you look at this in here, and I think the S&P is very similar, is that actually what we're seeing is that you can see that there, that 50-period moving average has been in control. Price has not been able to get above it, and price has kind of just been suppressed. And we talked about that in the Mastering the 4Ms webinar, about how we can use averages as an indicator of dynamic resistance. It's dynamic because actually it's constantly changing and updating, but hopefully you can see that actually how that's happening. And now I'm going to be curious to see whether we break that sort of 25,000 level, break those kind of levels from last week or the week before last, where we had that little crash there. So keep an eye to see whether this week, after the GDP rate news on Friday morning, to see what impact that has, whether that actually sort of nudges us beneath 25,000 to close beneath 25,000 on a weekly basis. I would consider that sort of bearish in the particular short term. So why we've had a look at there on the Dow. If we're looking at indexes, why don't we have a look at the DAX 30? DAX 30 is it's a very popular, very popular instrument with Admiral Markets clients. So we've got the rate on it. We like to sort of have a little look at what's going on here with the DAX. What we're seeing here, or what I've got up here, is once the chart updates, is that we're going to be looking at the weekly chart, and hopefully you can see that. Hopefully you can see that now. Interestingly, I read I think only yesterday that based on the sort of the recent price action, the DAX is now one of the worst performing indices in Europe this year. Even the FTSE hasn't performed as badly as the DAX, which is kind of an interesting take on it. Okay, even the DAX and the FTSE have not performed as poorly as the DAX. And what I'm looking at here on this weekly chart, ladies and gentlemen, on the big picture, is that I actually now see that as a little bit of a weekly head and shoulders pattern that has been playing out for us. Okay, and then that's now starting to sort of break its neckline and actually move down towards the move down to sort of to newer lows, which we'll have a little look at there in a moment. If I just draw this on, I appreciate some people are new to trading, okay, so that they may not understand what a head and shoulders pattern is there. But if I just basically put that there, okay, hopefully here we go. We can see this, just putting it up on the actual charts itself, so you can actually show what we can see. So here we have, we have a sort of a head and shoulders pattern here, okay. And we've had this bit of a scruffy right shoulder. I'd be sort of talking about there. But actually, what we can see is, when we had the little bit of a fall 2 weeks ago, we fell to the 200-period moving average, okay, which was always interesting, always a kind of an interesting point to sort of to see as a sort of as a halt of that. But then actually, what we've seen, if I go down actually to the daily chart, we last week, in fact, I'm going to go down to the 4-hour chart, which just might take a moment to update. When we were talking about it last week, okay, I talked about how we were in a little bit of a triangle, a little bit of a range there on the DAX, okay, and I was actually looking for us for price sort of last week to sort of nudge its way back up to about the 11,700 level, okay, and then I was saying last week if we had If we got a little bit of a reversal pattern there, then actually I'd be interested to be a seller there. Actually, what happened, you can probably see in the chart yourself, is that we actually went through that 11,700 level. I think it was more carried by some of the let's say some of the enthusiasm within the American markets. And actually, what happened is we went a little bit higher up into this next block, and then we sort of printed this very, very nice 4-hour key reversal candle. And that's a candle we've been covering on the Mastering the 4 Hours of Trading webinar. And we covered that that was where we were getting short last week. And actually, we can see that this week we have that's carried on, continued down nicely. It's actually broken that kind of 11,450 sort of zone we were interested in. And now it's actually, you can see it's broken down and broken quite significantly this week. Okay, and so at the moment, what I'd be doing is sort of just holding on to my shorts and looking at, well, where are my next options? Okay, in terms of if I want to try and run this trade, where are my next options? And actually, we're starting to look down really back towards the kind of around about the sort of 10,850, 10,840 area, which is a big drop. Okay, that's a 600-point drop, and I'd be very surprised for DAX to do that in one go. I think what will actually happen is I think that actually the price will rally back up to around about that 11,450 area, and then that might give you an opportunity to take another short onto the downside, because actually as I said, looking at the chart, the DAX has rolled over very, very nicely there, and that's my view would be to be bearish on that at the moment, and to be a seller of the DAX. Okay, so we've done the American indexes. Okay, let's have a little bit of a look at, as always. Let's have a little bit of a look at dollar index. Okay, which should just update in a moment or so. The dollar index, you've heard me talk about it for months basically, but you've heard me sort of touch about how the sort of over the last month or so. The dollar index has been twisting and turning. Okay, 1 minute bearish, next minute bullish. It's been sort of throwing traders left, right, and centre with its moves. But I said a couple of weeks ago that we'd finally got it back above that the 95 level there. Okay, and I was hoping that if we were to continue above it, to continue to hold above it on a weekly basis, my view would be that would be mostly bullish for the dollar. Here you can see the daily chart of the dollar index, and we talked last week. I talked last week about how we dipped beneath 95, but I wanted to see if the 20-period moving average, which is the blue moving average on my chart, whether that was going to act as dynamic support. Hopefully you can see that the sort of last week it act as dynamic support and propelled dollar back up above 95, where it's still residing. And now, excuse me. Short of any kind of major news coming out, I'll be waiting to see whether when we get the sort of GDP news on Friday morning, is that going to have an impact? Is that going to help us hold above that 95 level on a weekly basis? Because once again, that kind of gives me sort of strength in the dollar, and if I'm getting strength in the dollar, well then actually I'm going to look to be sort of weaken several of the other major currencies, and that's where we can look at for our own particular trade ideas. Looking at euro dollar. If we go down to there, then what we can actually do is, here we go. Here's the euro dollar on the weekly chart. Hopefully it's just updating. It's just appreciate it's a little slow. I apologize for that this morning on the technical side. But what we had talked about is that price sort of just being beneath that kind of sort of 115.30, sort of 115 sort of big round number threshold, and price has just been holding beneath that kind of 115.30 level. Okay, once the chart update, you'll see, and that sort of ties in a little bit with our dollar index chart. Okay, for those of you completely new to trading, well then what we'll see is very often the euro dollar is inverse correlated, very highly inverse correlated to the dollar index. So we're in the same way that we looked at a head and shoulder pattern on the weekly DAX chart. We might said that you could be seeing a sort of a head and shoulders, a bit of a scruffy head and shoulders pattern on the weekly euro dollar chart there. So I'm just still expecting us to see that, holding up beneath, you feel that that actually, holding beneath kind of that 115.30 is a little bit of a move. And what I'm actually looking at is, I think that the sort of the down move as on an intraday basis is a little bit overdone. And what I'm actually sort of looking for is, as we've got down to that kind of 114.50 area, I'm actually looking to see if we have a little bit of a counter trend bounce, and that's what I'll be looking to sort of take just a small trade on in terms of the looking to sort of move on that. I'm just drawing up my using my fib tool to give me an area. I just kind of like the fact that we've had a sort of a bullish key reversal candle there on the 4-hour chart just form. It's just nice there. So I'll be putting in an order there to sort of buy around about 114.55 with my stop down there at about 114.37. So that's gonna give me about sort of 18 to 20 pips of trade risk. And then I'll have a target of around about 115.20, which is give me about 60 odd pips of possible profit. So there I am at a sort of a 3-to-1 reward to risk on my trade. And I actually think that's as always, I like to have a nice asymmetric reward to risk ratio on my trade. And I think that that little sort of kind of bounce up there would actually then also give us an opportunity to maybe sort of build a longer term short position, which I think would happen. But I'm kind of as I said, keep an eye on that there today. That sort of 4-hour key reversal engulfing candle, okay, that's appeared around about that 114.50 area. As I said, I expect a little bit of a bounce. So let's finish off with a little bit on pound against US dollar. If it updates, I appreciate I'm having to be a little slower than normally, just a little bit of the sort of the slowness of the internet. So please forgive me for that. But here we have, as you'll see, when the pound against the dollar weekly chart updates. What we've been looking at is, we were looking at a case of, pound has been in a downtrend against the dollar, but then we had a little bit of a flag pattern. Those of you, yesterday we covered that on the Mastering the 4Ms of Trading webinar. We talked about flag patterns. This is a bearish flag, and we had it's a bit scruffy, okay, in terms of at the end of the flag pattern. We've been getting some kind of volatile price action. That's not really to be surprised as we're entering the kind of the end game of the Brexit negotiations. This is having an impact upon on the euro and on the sterling. And what I sort of said in a few of the webinars is that if you're trading sterling at the moment, you just need to be very careful. Sort of lower your risk in terms of because there can be a sort of volatile movements based on a complete political sort of commentary that comes in and out. We talked about on the daily chart there a couple of weeks ago, and some with my own clients, that we still had the flag pattern, but we had very nicely a couple of weeks back we had a sort of a daily key reversal candle there. Okay, price pushed to a new high. But actually, then it closed right down beneath the lows the previous days, and then we were actually looking to be short around about 132, and targeting down towards that daily 50, and so we just got beneath that 130. It's run nicely over the last week. What we also have now is we're now we've had that break of that bigger sort of pound dollar timeline flag pattern, and so we'll be keeping an idea to sort of watch how that plays out over the rest of this week. Mrs. May has got a little bit of a she's got another week of sort of a political sort of shift shaping, okay, to basically keep herself in the job, and of course anything that comes out about that will have an impact upon the pound and also the euro sterling rate. So I think they're about for time yens. I apologize, ladies and gentlemen, if it was a little bit slower today. I apologize for the internet. Sometimes that happens. As always, wish you best success in your own trading. And if we have time for questions, I'll take one if there's time, Jens.
No, we are done with our goal, 15 to 20 minutes, so it's fine. Sorry also from our side about the quality of the voice today. It's about the internet, so too many school kids around Paul today in the internet, so that's why maybe. Tomorrow's another day. Tomorrow, a new day trader, 5 days a week, 5 different traders. And if you'd like to see and watch that again, a couple of hours later, it will be available in a YouTube channel is a recorded video. Thanks to Paul. Hope to see you all again. 5 days a week, 5 different traders all the time. Best trades. Wish from Admiral Markets. Greetings. Bye-bye.